Ladies and gentlemen, boys and girls, Vishal Thakkar, your finance guru, back with one of the most interesting topics of discussion called different types of profits or value creation in business. Now friends, after understanding return on capital employed or popularly known as accounting rate of return, it is very essential to understand that how does business create value for the society. So here we go. I am giving you 5 options. Here they are: revenue, operating profit or EBITDA, PBIT, PBT or PAT. Which of them is a value created by the enterprise during a year? Let's take them one by one. You would obviously say revenue because that's the money coming in. We sell products and services at that price. All the money is paid out of the revenue generated. Now you may be right to that extent, but however, for generating revenue, apart from equity and debt, there are 2 more inputs which are required. So revenue is out of question. You may say PAT, hey, that's the final profit left after reducing all the expenses. That's the value created by the company for society. Well, again, you are partially correct, but however you forget that PAT belongs to 2 stakeholders, but PAT is arrived at already after paying off 2 stakeholders. So again, PAT may not be the correct answer. Then you may go to operating profit. Operating profit is the right answer because it is telling you the profit generated from the operations. Well, it is partially correct because apart from equity and debt, there are 2 more components which are needed for value creation, and they are capex and opex. We popularly also call them as capital expenditure and revenue expenditure. For details on the same, we'll see it in the other video. But however, if you are considering operating profit, then operating profit only considers opex or revenue expenditure. It does not consider capex. So again, operating profit is not the most appropriate answer. You may say profit before tax. Profit before tax, well, it may be the right answer, but again here, profit before tax is arrived at after giving the value to one of the stakeholders, that's the lender. So that leaves us only with one option, which is PBIT. And yes, ladies and gentlemen, PBIT is the right answer, and PBIT is the value created by the enterprise because PBIT is arrived at by reducing depreciation out of operating profit. So apart from equity and debt, capex and opex are also reduced, and from PBIT, the value distribution starts. The first person or the first stakeholder who takes the value is the lender. The second is the government. The third is the shareholder. And finally, fourth is retained by the company for future expansion and diversification. So different types of profits we saw: revenue, we saw EBITDA, we saw PBIT, we saw PBT, and we saw PAT. And which is the value creating profit? PBIT. So for more such conceptual discussions, credit ratings, project evaluation techniques, and basics of finance, don't forget to subscribe to our channel, Finance Tube. Discussion is income statement. Income statement, which was erstwhile popularly known as profit and loss account. Profit and loss account gives information to us as in stakeholders of the company.